Good morning, everybody. This is the live market open for Wednesday, May 24th. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. And as usual today, we'll talk about recent developments in markets, cover various charts and levels, focusing on majors and crosses, discuss the upcoming events. It's quite a busy end this week. Our special for today is a focus on Trump's scandals. Well, now it's a bit quieter than last week, but still quite busy. Our currency of the week is euro dollar. And as always, we'll cover the week ahead and continue and wrap up the show. So good morning, Ed. Good morning, everybody else. Of course, your questions are very, very important. Comments, questions, you're most welcome. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Okay, let's begin. So the mood this week in the markets is a bit damp, a bit depressed because of that horrific bombing in Manchester 2 days ago. So 22 people lost their lives in a terror attack at the Manchester Arena following a rock concert. I must say there is no impact on markets. So we did see maybe the pound drop just a bit, but basically does not move on anything related to this news. But who knows? We might see further developments. The level of threat in the UK has been raised to critical. So that means that the UK government is worried about a potential imminent attack. Okay, so there is some worry there. US dollar is recovering. Last week we saw a dive on all those Trump scandals and the Comey memo, and we'll focus on that more in detail. But at least for now, once again, it has refocused on the hope for a rate hike in June. We will hear from the Fed through its minutes today, and again through various Fed speakers. All right. Earlier this week, we already managed to forget it, but German Chancellor Angela Merkel said that the euro is too weak. That helped the euro rise. Since then, it fell. And we also had talk about Brexit, that Britain might walk away from Brexit talks if it gets a Brexit bill that is too high. Just before the bombing in Manchester, Prime Minister Theresa May was losing some ground, so it hurt the pound just a bit. Since then, campaigns have been suspended. Oil prices are on the up. Maybe this time it's for real, because there is some delay in shale production. The rise in shale production from the United States has slowed down, but we'll have to see tomorrow with the OPEC meeting, of course. Okay, before we move on, I see a comment here from Ed. It says, I worked out the euro rally as market cashing out USA stocks, rotating into Europe. Well, stocks, yeah, this could be. I think the bigger picture is that there were worries about the euro because of all the politics about mostly the French elections, the second largest country, and there was fear that Le Pen might win, again, defeating opinion polls. So I think the euro was held back until the elections. And after the first round, already back at the end of April, we saw this weekend gap for the euro higher. And since then, it has been gradually continuing higher, not necessarily with the second round, with the victory of Emmanuel Macron, but following that. So if you compare, we'll talk about that later, but if you compare politics in the US and Europe, I think that's one of the main drivers. Regarding stocks, we had this mini crash last week. But again, our focus is on Trump today. You'll see that the effect on stocks was very, very short-lived, but I think regarding the US dollar, it could be more interesting. Okay, I hope this answers your comment. Let's continue with further events. So, just a quick preview of Trump's scandals. He's touring the Middle East. He actually just landed in Rome, left Israel. But the scandals continue. The latest news is that Michael Flynn, the disgraced national security advisor, might invoke the Fifth Amendment. That means he will opt not to speak, not to disclose incriminating documents. James Comey, the fired director of the FBI, former director of the FBI, will testify next week, and the FBI has a suspect in the White House. Basically, almost every day there's a new revelation, either by the Washington Post or the New York Times. Another comment here from Ed. Historically, I can't find out or remember a double gap never closed, and I'm sure 99% of retail traders tried to trade the close but got stopped out. Yeah, the gap was not closed. That first round victory for Macron back on April 24th. Okay, let's run through a bit of data we had in the past week. Jobless claims slipped to 232. That's good news. We also had on the same day, last Thursday, the Philly Fed Manufacturing Index rise leap to 38.8. But yesterday, new home sales, well, this badly disappointed with drop to 569. It might be a one-off. So we had a few Fed speakers. Something that doesn't appear here on the slide is that Harker, which is a known hawk, goes well together. Harker and hawk. He talked. He was more positive about the growth outlook, but on the other hand, Bullard was worried about growth. That's a change. So he's reluctant towards the rate hike. And Brainard, which is a permanent voter, she was quite neutral. Okay. So we'll have to hear a bit more also from Brainard and from others, and the Fed and the meeting minutes tonight. The Fed decision is on June 14th. The quiet period begins sometime next week, so we still have a few more Fed speakers to give us some hints. Outside the United States of America, we had jobs growth in the United Kingdom. The unemployment rate dropped to 4.6, but earnings are now slower. Nominal earnings are now slower than inflation. That means that purchasing power of Brits is falling, is deteriorating. I think it has some kind of an impact on the elections, but May has such a huge advantage. On the other hand, retail sales came out better than expected in April, jump of 2.3% after a few gloomy months. In Japan, GDP beat expectations with 0.5. We just had last night an opinion relatively optimistic by Bernanke about the Japanese economy. He's been advising to the Japanese government. Australia, jobs beat there with 37.4. Big gain there. On the other hand, something I forgot to mention regarding the mood, we had talking about Moody's. Moody's downgraded China for the first time since 1989 to, I think it was A2. And in any case, this downgrade hit the Aussie just a bit. We'll show that in the chart soon. In Canada, of course, CPI disappointed. Well, now Canada hopes for a big turnaround in oil. The German IFO figure and the PMIs both came out better than expected, reflecting strong growth also in Q2 in the Eurozone. At least here where I am in Barcelona, we're seeing nice growth. Okay, so finally the charts. Let's begin with the charts. So this is our technical segment. We have 1 week left in May for the major pairs. Let's look at the charts. Beginning, of course, with euro dollar. So this is the big picture for euro dollar. We had it, the pair rising in a channel since the beginning of the year, and then making quite a big move to the upside. But as you can see here, we got stuck at 112.65, 66, and that's the resistance for now, just under the 113 line, which was the swing high on the US elections. Okay. And it fell, we're now close to support here at 111.80. So this is the current range. High resistance 113.60, lower support 111.20, which was support also back in September. Further support 110.50. Okay, let's continue with the pound. The pound made a nice move above 130, reached resistance there at 130.50, which also coincides with a low point it suffered back in August last year. So the battle for 130 continues. We're currently at 129.73. We had this initial high of 129.80, just under 130 is a pivotal line in the range at the moment. Support 129 and 128.25. Dollar yen reflects this comeback of the US dollar after the big fall. So it's quite interesting what's going on here in the past month or so. We bottomed out at 108.10, reached a high of 114.43, dropped all the way to 110, just above 110. To be precise, we didn't reach 110. Now we're back up. I still look at this line of 111.60, used to be a triple bottom, but resistance here at 112.20, followed by 113, 113.60, and 114.30, the cycle high. Support 110, 108.10. Dollar CAD. So the Canadian dollar is off the highs, but you can see the pattern is an uptrend. So if we talk from bottom to top, the peak of this cycle was 137.90, then it's followed by 137.50, 136.80, which was high support when the pair traded in high range. 136, not as strong as it used to be. It was a peak back in December, and we're looking now at support 134.60, 133.80, and further below, much lower, 130. The OPEC meeting is left, right, and center. Aussie dollar, also here we made a drop all the way to 73.30, and since then we've bounced back. We had the good news from Australia. So currently 74.60, looking towards support 74.50. Well, we're very close to that. We had this fall earlier today. Further support 73.75, high resistance 75, 75.20, very close lines, and strong resistance there at 76.10. Kiwi, the battle for 70 continues. So we did reach lower ground. We reached, fell below the previous cycle lows, below the previous 2017 lows. So we reached a low there, a trough of 68.15. It's followed by 68.80, 69.60, 70.40. We touched that, but could not go higher. 70.90 and 71.25. Dollar Swiss, the Swiss franc is finally moving a bit, mostly, by the way, reflecting the strength or weakness of the dollar. So basically, it's more weakness, but now we're seeing some kind of a bounce back. So 97.53 is the level right now. 97 is support, followed by 96.60, high resistance at 98.20, 99, and of course parity. Not that long ago, we traded at 101. Okay, so that's high resistance. So finally waking up in this pair. So okay, this concludes our technical segment for major pairs. And now our technical segment for crosses. 1 week left to the month of May. We continue where we left off with the Swiss franc, but the Euro Swiss, where the S&B likes to intervene quite a bit. So currently 109.60. We went up, we almost reached 110. Didn't really make it. Support 108.70, further support 108.50, 108.25, and strong support at 107.90. This gap that you see on the chart is the same gap that we've seen on euro dollar. That's the first round of the French elections. Much lower support, 106.25, high resistance up in the sky, 110.15. Okay, the Brexit cross, euro pound, currently at 86.20, resistance 86.75. That's just the recent high, followed by 87.80 and 88.50. Support 85.70, 85.30, and well, strong support at 83.30, quite a veteran line there, and 82. 83 on the downside. Okay, euro yen has seen quite a few big moves there. We bottomed out at 114.80, reached a high of 125.80, so it's 1,100 pips just in since the middle of May. Currently, we're at just around 125, resistance at 125.80, so we're at the top end of the current range, but we're seeing the pair slowing down, losing some momentum. Support 122.90, but well, we have quite a few choppy lines there. I would note 123.80, further support 121.30. We need to find, if we want high resistance, we need to zoom out and fall back to levels last seen 1 year ago. So we're at 126.60, 127.70, and well, 130 is high, still a bit too far. Pound dollar, the Geppy, the dragon. The dragon was asleep for a few months at the beginning of 2016. It did wake up. Now it's taking a small siesta once again. Currently 145. resistance 146.80 and 148. These levels are quite consistent. Support 142.80 and the round number of 140. And as always, we conclude our technical segment for crosses with oil. Oil with the OPEC meeting currently 51.60. Resistance there at 52, which was an old line that capped the previous range before that important OPEC decision last November. High resistance 54.50 and 55.20. Support 49.50, 47, which used to be a triple bottom, and when it was broken, we saw quite a crash. The crash reached 43.70. And if we have a total disaster tomorrow in the OPEC meeting, then 42 is the next level to watch. At the moment, it seems highly unlikely. All right, so this concludes our technical segment for crosses. Now for our special segments. Well, no, sorry. Before that, we'll discuss the upcoming events. And this time it's quite a busy week, so it wasn't so busy so far, but now things are warming up. Mario Draghi is here in Spain, is in Madrid. He will be speaking later, and will he be a bit more upbeat about growth? Core inflation reached the highest levels in 4 years. Will he be more upbeat? Usually Draghi is the dovish one on the governing council, letting the Germans and other northerners be a bit more upbeat, a bit hawkish on inflation. So let's see, the euro is waiting. For those trading the Canadian dollar, we have a rate decision. No changes expected. The interest rate is likely to remain at 0.5%. It all depends on the tone. Inflation is lower. I would expect a more dovish tone from Stefan Poulos and his colleagues in Ottawa. But, well, we'll have to wait and see. At the same time, we have U.S. existing home sales. Sales of second-hand homes are the vast majority of the market, but they don't have the same economic impact as new home sales. We have oil inventories. The last report before the OPEC meeting, we had this weekly report impact currencies quite a bit, and the Fed meeting minutes. So let's dedicate a bit more time on that. A few things are important to remember. In theory, it's just a protocol, just what happened, a documentation of what happened in the last meeting, which was about 3 weeks ago, exactly 3 weeks ago. Okay, so in theory, this is a stale document that reflects the opinions of the Fed members 3 weeks ago. But we do know that this document is revised until the very last moment. So we're not going to have there anything that these members, Yellen and her colleagues, didn't say. It's not going to be a total lie. But the tone and the wording can be edited until the very last moment to reflect a message that the Fed wants to send us, the markets. In many cases in the past, we had the Fed go hawkish on the statement and a bit more dovish in the meeting minutes, or the other way around, sort of balancing things out. The big question is what's going to be in June. Since their last meeting, we had a few disappointing figures. Weak wage growth. We'll have another more figures about growth. This week, retail sales were relatively poor, and inflation, the second mandate of the Fed alongside jobs, it was weak. So the Fed's favorite inflation figure, the core PCE price index, fell to 1.6 from 1.8, and the more generic inflation measure, core CPI, it dropped from 1.8, dropped from above 2% to 1.9%. Okay, so I expect them to be a bit more dovish. I expect them to lower the odds of a June rate hike, but of course you should trade after the event, not before. But that's certainly the most important event of the week, unless some surprise comes again about Trump. But assuming no breaking news, this is the biggest event of the week, the Fed meeting minutes. In some cases in the past, it has been a snoozer, a non-event, but because the odds for rate hike, it's a bit uncertain, we might have some market-moving events today. Okay, so that's today. Let's continue to tomorrow. The OPEC meetings left front and center. You know what? Let's focus a bit on that as well. We had a deal between OPEC members, most prominently Saudi Arabia and Iraq, Libya, Algeria, some Venezuela and Nigeria, with some South American countries, to cut production. The deal began in January and ends very soon, at the end of June. Now they want to extend it, and the deal also included non-OPEC countries, most prominently Russia. Russia, Saudi Arabia, and the United States are the largest producers. Okay, so they cut production, announced it back in November. It stabilized oil prices. They began implementing it in January. Saudi Arabia is doing most of the work for its other OPEC members, which are producing, well, basically as much as they can. And now there is talk about extending it either by 6, 9, or 12 months. I think it's converging to around 9 months, which is more than the current deal for 6 months. So that should keep oil prices elevated and, of course, help the Canadian dollar. There was also talk about deepening the deal, so cutting more than the previous cuts. I'm not sure that will happen. We'll have to wait and see. But I believe it will be on the same conditions and for 9 months. That's more or less what's priced in. Now, I'm a bit more bullish than I used to be on oil because shale production in the US, yes, it continues rising, but it's slowing down. It's not accelerating at the same pace. So production fell from 9.6 to 8.7 million barrels per day. Now it's back up to 9.3. It could inch up a bit more, but not at the same pace. And if OPEC cuts, there might be a future for oil bulls, okay? But you never know with OPEC meetings until the very last moment. It happens tomorrow in Vienna. All right, so we have these two big events, Fed minutes and OPEC, but we have other things as well. We have UK GDP. Usually revisions are quite minimal or non-existent. In any case, UK GDP was strong after the EU referendum in the latter half of 2016, but in 2017, GDP growth fell by half, only 0.3. This will likely be confirmed. We also have jobless claims, and among Fed speakers, we have quite a few. I would point to Lael Brainard, a permanent voter, mentioned her before. She will be speaking tomorrow as well. And on Friday, we have durable goods orders, which is for the month of April. But the markets will be focused a bit more on the second release of GDP. The first release showed only 0.7%. This time an upgrade to 0.9 is expected. In any case, we'll cover it live on FX Street with Valeria Bednarek and Mauricio Carrillo. So that's Friday, 12:30 GMT. We'll begin our broadcast as usual around 12:15, 15 minutes before the event. And to close the week, we have a revised version of the consumer sentiment. So quite a few events this week: GDP in the United States, OPEC, and the Fed minutes. A big event every day. Okay. Let's continue. So our focus this week, our special, is Trump, the United States president, the 45th president of the United States of America. We began hearing the impeach word. That is quite distant, okay? It's a bit far out. The United States is very stable. It took Nixon, from the initial revelations to him resigning, almost a year. But Trump is not as professional as Nixon. In any case, we're hearing the impeach word, and we've seen some reactions. The biggest worry for Trump, there are lots of scandals, of course. He had lots of scandals also during the campaign, is an obstruction of justice. So Trump trying to influence an investigation basically against him. This is a quick run on events. In February, Trump asked Comey to let Flynn go. Flynn is the disgraced national security advisor that lied to Congress, lied to the vice president, and was forced to leave after around 3 weeks. Trump tried to ask the FBI not to get into that investigation, which could have impacted him as well. In March, Comey said there is an investigation. He said that publicly. In April, beginning of May, Trump fired Comey. That was the big event. And at first, the White House tried to say it was because of professional recommendation, but then Trump said on television that he always wanted to fire Comey. And we're seeing the administration scrambling. Each day we have new revelations, like Trump said Comey's a nut job, and that he boasted to the Russian foreign minister that he finally got rid of Comey. In any case, it seems that Trump is in a mess here. So finally, the Department of Justice announced a special investigation, but it could go quite slowly. The investigator, the former FBI director Mueller, he is known to be very thorough, has high integrity, highly respected, but being thorough also means being quite slow, so it might take a long time. One White House official is already eyed by the FBI investigation, and it'll be a big show next week when Comey will testify sometime after the Memorial Day weekend. So here we have perhaps the suspect at the bottom, Steve Bannon, right-wing extremist with Donald Trump, and up there we have, George W. Bush, former president, with Mueller. He nominated Mueller 1 week before September 11th. In any case, let's talk about markets, not only about politics, which are fascinating. We've seen a big sell-off in stocks last Wednesday with all this talk about obstruction of justice, but that didn't last that long. The big thought is, well, if there's no recession, we shouldn't worry. Stocks are still valuable, company profits are still high, everything's okay. So watch out for bank stocks, because bank stocks did rise on hopes for deregulation, and if Trump is stuck, then deregulation will not work. Doing a big number on Dodd-Frank will just not happen. But the dollar was hurt. Why? So the dollar rallied back at the end of 2016 on hopes for tax cuts and infrastructure, and now there's uncertainty about both of these. So it's an undoing of the dollar rally, and uncertainty could also be hurting the wider US economy, because we don't know what the budget is going to be. The administration presented a new budget while Trump was abroad, and it seems to be sort of dead on arrival. Growth was already slow in the United States. Well, we'll have an update later this week. And well, so far only tourism directly suffers from Trump because of all the talk about the travel ban. So we have some reports about suffering there, but the wider economy so far continues growing slowly. It began before Trump, the slow growth, but in any case, the dollar is less hopeful. So the dollar remains under pressure. We've seen some kind of a comeback today, yesterday, but I expect the dollar to continue suffering as long as we have this constant inflow of news from the Washington Post, from the New York Times, from other outlets. Even Fox News is covering all this stuff. Special counsel, the work of Mueller could take quite a long time. But so far, things are moving quite fast again. So the news reports are much faster than the investigation. Well, the news reports, in many cases, rely on leaks. Impeachment talk likely to increase. And if we have more talk about an impeachment of the president, the dollar will likely be under pressure. Okay? Now, what can happen with the investigation? It could take months, it could take years. If Trump is acquitted, he's innocent, then the dollar could rally because we have a big political cloud removed from the administration and they could continue pursuing their agenda. But if Trump is found guilty of obstruction, I would expect more uncertainty and more pressure. But if we do reach an impeachment, when we have all these proceedings, it's quite a complicated process. It could go very, very slowly. I expect more pressure on the US dollar, but lots of choppiness, moves in all directions. And if we find ourselves in a year from now, or months, or I don't know, at some point with this guy, Mike Pence, as the president of the United States, I believe we'll see a buy the rumor, sell the fact. Pence is not a panacea. He's not superstar president, but he's still a normal Republican, a bit more predictable than Trump, at least. Perhaps not big on reforms, but at least fewer scandals, more quiet, less political drama to influence the US dollar. Okay, That's a bit far out. We might not reach an impeachment at all, but it seems that Trump is in trouble. So to conclude, politics still have a big influence on the US dollar. Less on stocks, company profits matter more than the latest political scandal. Watch out for the immediate next big thing is Comey's testimony next week. And time will be announced. And the real economy, the Fed, of course, still matter. Okay. So that was our special segment about Trump troubles. And now for our currency of the week, euro dollar. So let's just do a comparison between the US and Europe. We just talked about Trump. So the United States is a mess. Republicans are in infighting about the healthcare bill. They had issues with the first attempt. The second one is moving slowly. Tax reform looks a bit far. And they stopped talking about infrastructure. Trump's Russia stories, well, it's an incessant flow of news. Fear about obstruction of justice by the president and his team. And there is a special investigation going on by a senior investigator, former head of the FBI, Robert Mueller. Okay, so that is quite messy. If we compare things to the Eurozone, which was a big mess until not that long ago, we had pro-European Emmanuel Macron elected as the president of the French Republic. Angela Merkel, the long-leading German chancellor, already 12 years in office, she's leading in the polls to win a fourth term. And her challenger from the socialists in Germany, he's also very pro-European. So it looks like the establishment is winning in Europe. And since Trump's victory, the far right is in retreat, underperforming polls. That's Austria, that's the Netherlands, and of course, France. In the economy, the US growth is only 0.7% annualized, and that means, and Eurozone growth is 2% annualized, 0.5 quarter over quarter. Core inflation is slipping in the United States, 1.9, and in the Eurozone, it's at 1.2, and on the rise, the highest in 4 years. Unemployment in the Eurozone is still double that than in the United States. In the United States, it's 4.4. Here, it's a bit more than double, 9.5, if I'm not mistaken. Monetary policy. So there are some cracks in the Fed's eagerness to hike rates in June because, well, the economy is slowing. And the ECB, on the other hand, is under pressure to begin the end of QE sometime, well, taper down in 2018, at the beginning of 2018, and then stop it altogether. All in all, the US economy in general, monetary policy, they're still in the lead, but the current direction of travel is towards a slightly looser policy in the United States and slightly tighter in the Eurozone. So for me, the conclusion is that Eurodollar has all the reasons to rise, okay? Politics, the economy, monetary policy. But as we've seen in the past, 24 hours or so, Forex trading is never a one-way street, and we could see a correction before the next big move. The rally could halt, okay? So let's look at the chart to conclude this quick segment about Eurodollar. Again, we had this bottoming out at 103.40 early in the year, an uptrend channel since then, higher lows and eventually higher highs, continue trading higher until we made a break to the upside. So breaking above an uptrend channel that shows a lot of strength, a lot of momentum, reached a peak of 112.63. That's the immediate line of resistance. It's followed by 113, 113.60, and 114.20. These were high lines last autumn. Support 111.70, which was the recent low, 111.20, and 110.50. Below that, we have 109.50, 108.70, 108.25, and below this gap, 107.75. Okay, so these are kind of levels for the euro. We had a very nice breakout. Now we're seeing consolidation, correction. My bias is to the upside, remains to the upside. Okay. So had the Eurodollar special. And now let's preview next week, a week which turns a page on May and June begins. So on Monday, very, very quiet start to the week. It's a holiday in the United States, Memorial Day, and in the UK, I think it's just spring bank holiday or something like that. Anyway, liquidity will be very low because these are major markets. On Tuesday, we have German and Spanish CPI, a warm-up for Eurozone CPI inflation figures. And we have the Fed's favorite inflation figure, the core PCE. Price spending dropped 1.6% year over year last time. And it shows slowing down in price action. Also, we have the CB Consumer Conference on Tuesday. On Wednesday, we have Eurozone inflation, critical for the next moves by the ECB, their June meeting. Their new forecast that will be released in June. We have also Canadian GDP. It's released on a monthly basis there in Canada, and US pending home sales. And on Thursday, beginning of the new month, June 1st, we have capital expenditure and retail sales in Australia, Chinese manufacturing PMI, so a big night for big start to the month for the land down under. Also, we have the UK manufacturing PMI for those trading cable. And then we have a few hints towards the non-farm payrolls. We have the ADP number on Thursday, just one day before the NFP because of this holiday. Same thing goes for the US ISM manufacturing PMI. We have all the hints on just one day. Usually these figures are released on Wednesday. This time it's on Thursday. So the build-up will be very, very short. And of course, Friday, US non-farm payrolls, the main event of the week. As always, the king of Forex indicators. We also have more figures from the UK and the Canadian jobs report. So quite, slow start to next week, and then it all blasts on Friday. Would mention that this time we have the ISM non-manufacturing PMI released only on the following week. Okay, so one of the big hints towards the non-farm payrolls will be absent in next week's build-up. Okay. All right, so that concludes our preview for the week that turns the page on May and June begins. That was a fast run on the slides back to the beginning. And now it's time to wrap up the show for May 24th. So some doom and gloom in markets, well, not in markets, in the media, because this horrific bombing in Manchester. The level of threat is critical in the United Kingdom. So far, market reaction has been quite muted. US dollar is recovering. There are some hopes for a hike, but this is a correction to the big falls related to the Trump scandals. The euro stood out at least so far with rises. It was also buoyed by Angela Merkel. Britain may walk away from Brexit talks, but well, it doesn't impact the pound that much. Watch out for oil prices. They're on the up ahead of the OPEC meeting, and because US shale production is slowing down, they're ramping up production, but it's slowing down. Trump, watch out for news coming out from major US outlets. We had a few relatively quiet days as Trump continues his worldwide tour, his first trip abroad, but the scandals continue. And the big event is next week, the Comey testimony. Watch out for Fed officials speaking out. Brainerd was quite neutral, but she speaks once again. In this wrap-up, let's also mention, this week's quite big event. We have Mario Draghi, president of the European Central Bank, speaking today. Rate decision in Canada, no changes expected. Maybe they'll go dovish. Oil inventory is the last one before OPEC. Markets could be quite sensitive to that. Remember, there is also an inverse correlation at times, not all the time, between the US dollar and oil prices and the Fed meeting minutes. My bias, I expect them to be a bit more dovish after their statement was relatively hawkish. We've seen through the slowdown. Maybe now they'll take it a bit more seriously, at least in the tone. And tomorrow we have the OPEC meetings. They're expected to announce an extension of production cuts for another 9 months until the end of March. an update on GDP, and I would focus on Brainard among all the Fed speakers. On Friday, we have I invite you to join the second release of US GDP. There, in the United States, contrary to other countries, revisions are quite significant. They can be even wild. And we also have durable goods orders, also of importance. Okay, so let's, in this wrap up, take a quick look at the charts. So Eurodollar retreated from the highs, the range 112.63 to 112.70. Pound dollar hugging the 130 level, 130.50 to 129. Dollar yen fell from the highs. Got confused with the previous pair. It's rising from the lows. 110 to 113 or 112.20 is the current range. Dollar CAD awaiting the OPEC decision off the lows of 134.60. 135.40 is resistance. Aussie dollar currently 74.60 with all the Chinese downgrade noise. 75.20 is resistance. Support 74.60. And the Kiwi dollar hugging the 70 level. I would say almost as usual. 70.90 to 69.60 is the current range. Okay, so one last thing in this wrap up. These are the odds for June rate hike. At the moment, they're still high. The meeting is on June 14th. That's exactly 3 weeks from now. So it's 83% chance for rate hike according to bond markets, according to this tool by the CME group, the FedWatch tool. I would watch it closely in the next few days. Well, we'll see the reaction, of course, in the dollar as well. Okay, so that's our show for today. Thank you very much, everybody, for coming. As usual, the show will be available as a rerun on FX Street, on YouTube, and Forex Crunch. And later today, you can watch the specific video clips from the show, the Eurodollar special, the Trump special, preview for next week, everything, and then it'll be republished also on Forex Crunch. So I wish everybody a safe and successful day in markets today, and see you in the live coverage and next week. So that's it for today. Thank you and bye-bye.